One of my friends who is well settled in US has been diverting all his investments and savings to India to buy lots of real estate and assets. Do you know the reason why? Because the dollar value is appreciating and rupee value is diminishing. At present, $1 is equivalent to almost 83 rupees. Hi, my name is Ranjith Reddy. Welcome to Research Dialogue. As I told you, the value of rupee is diminishing, the value of dollar is appreciating. So at the time of independence in 1947, $1 is equivalent to almost 3 rupees. But today, after 75 years of Indian independence, $1 is equivalent to 83 rupees. The value of rupee has diminished almost 10% in just 1 year, last 1 year. Why? The reasons are multiple. It could be Russia-Ukraine conflict, increase in oil prices, increase in inflation, increase in trade deficit, increase in the oil prices world over, the economic slowdown, the COVID-19 pandemic, decrease in foreign investments. The reasons are several. So what does this steep fall of rupee actually mean? Is it really good or is it bad for the economy? So the fall in rupee to a certain extent is actually good for the economy. It promotes exports. It helps in providing better returns for the exporters. Of course, it equally has some burden on the importers as well. But the fall of rupee beyond certain limit will become detrimental to the economy. Now, let us understand the genesis behind the fall of value of a rupee. See, rupee, or for that matter, any currency, the value of the currency will generally fall down because of two different approaches. One is devaluation, second is depreciation. So devaluation is nothing but the respective government voluntarily reducing the value of the currency, the value of a rupee, for various administrative or strategic reasons. See, India before 1990s used to follow administered exchange rate. That is, government decides the rupee dollar exchange rate. So because of this, government voluntarily decides the cost of the rupee against dollar. However, post 1991 economic reforms, government has deregulated the exchange rate. Interestingly, China still follows this particular method. There is administered exchange rate, where the Chinese government determines the value of the Chinese currency against the dollar value. The second methodology is depreciation route, which is based on demand and supply of dollars. It is the market determined exchange rate. So now, as I told you, there was a steep fall of rupee value, particularly in the last 1 year or last few months. Let us understand the reason why. It is simply because of inflation in US. So all of us are seeing news in newspapers, TVs regularly that there is an inflation in US, because of which there are huge layoffs and job cuts in the market. So as there is inflation, to counter that, to overcome that, the US government tries to increase the interest rates. That is because increase in US interest rates is considered as a counter to inflation. As the interest rates are increased, investors will get better returns. So investors feels that dollar is more secured compared to other currencies. So investors tend to get attracted to US markets and tries to invest as much as possible in the dollar denominated assets. So as a consequence, the concerned foreign investors, say foreign institutional investors or foreign portfolio investors who have invested in the Indian markets, tries to withdraw their investments, go back to US and further invest in the US denominated assets. So because of this, there will be an imbalance in the foreign exchange reserves of our country. So this has a severe impact on the rupee value in terms of dollar. According to International Monetary Fund, IMF, the value of rupee will further come down to 94 by the year 2029. So amidst all this, the government of India and the Reserve Bank should step forward and take necessary precautions to balance and stabilize the value of rupee. Of course, there are already certain initiatives being taken by the government and the Reserve Bank, including the increase in the taxation of the gold, because gold constitutes almost 8% of the total imports, provision for international trade in rupees, allowing banks to provide higher interest for foreign currency deposits. So hope all these initiatives will definitely strengthen and stabilize the currency, our Indian currency. So let's see how future will unfold the value of rupee in the days to come. So what do you think? How can the value of Indian rupee be stabilized? Please provide your opinions in the comments. Thank you. Jai Hind.